Okay, Kate, have you got another speaker for me?
Yeah, we've got Eric Gebhard.
Eric, are you with us?
Yes, I'm here.
Hey, I bet you've been cleaning up with this AI stuff.
Well, I think you hit the nail on the head in your last few comments there about really killing it here with the technology of late. This first 6 months or so has been on fire. I'm going to briefly touch on that, but that's your specialty, not mine. So I'll leave that one to you. But
6 months ago, people were saying tech is dead. They're never coming back. California is going to fall off and sink into the ocean. And I'm saying, watch out, these tech stocks, they always come back. And that is exactly what has happened.
In a big way. And by the way, in the first few minutes of my presentation, John, I've got a slide I've inserted especially for you. So
great.
I'll make note of that when I get there.
All right. Go ahead and get your PowerPoint up. Eric Gebhard is the CEO of Altivest. Upon graduating from the University of Southern California, go Trojans. With a BS in Business Administration, Mr. Gebhard acquired his Series 6 and 63 securities licenses and worked as an account executive with a European mutual fund group. He then earned his Series 3 commodity futures license with an options specialty firm and worked with two other futures brokerage firms before co-founding Altivest in 1997. Altivest developed ThetaTrader to make complex option spreads simple. Its proprietary algorithm will automatically create multi-legged option strategy trades on stock indexes such as the six-legged dragonfly spread. ThetaTrader can automatically manage positions, making screen watching obsolete. ThetaTrader also utilizes a unique, responsive one-touch trade alert functionality. Altivest's unique option strategies offer non-correlated investment opportunities. In addition to his Series 3 commodities license, he holds a Series 65 Uniform Investment Advisor securities license. He also volunteers as a member of the Dean's Advisory Council for La Sierra University's Zapara School of Business and is part of the advisory team for the investment office of the SDA Church. When away from the office, Mr. Gebhard enjoys ventures outings with his family along with vintage automobiles, bike riding, and snow skiing. Great year for skiing, wasn't it?
Yeah, almost too much of a good thing.
It was. It snowed so much you couldn't get up to the slopes, and if you got up, you couldn't get out.
That's what happened. We were kind of on hold for at least 2 weeks before we could get back to the mountains. So
I know it's happened to me several times, but being snowed in at Tahoe isn't the worst thing in the world.
There you go.
Okay, you have until 5 minutes before the hour. Then I'm going to hand over the next batch of prizes for the summit. I'm going to mute myself and you have the floor.
Great. Thank you, John. All right. Thanks for joining me here, everyone. And we're going to talk about automated options trading. We're looking at some of the professional strategies in use in the options trading community. We have some proprietary approaches as well that you've never seen before. We have incredible one-touch responsive trade alerts, and we'll dig into a demo on that. So this is to help you not babysit your screen all the time. And then we're just going to briefly mention why we think it's important to have these flexible strategies, because as you know, markets don't always go straight up. They can go sideways and lower. So we're going to jump into that here. And first, remember, we're speculating. We're trying to make money, but there's always risk when you try to profit. That's where they're explaining there to the Valentine there, the Duke brothers from Trading Places. And do take a moment and look at that risk disclosure. It is important. I'll be quiet for just a moment. So the thing to realize here is that all funds committed should be risk capital, and past performance is never a guarantee of future results. All right, a little bit about Altivest. Won't spend any more than a few seconds on this. Since 1997, people ask how long we've been doing it. So we've been a brokerage firm since 97. That's yours truly in the middle of some of our colleagues and some of the floor traders on the S&P 500 options trading pit. Those are the group that worked with us. So we've traded tens and tens of millions of contracts over the years, multiple decades. And we're in the futures and options business here. So we're highly regulated. We're audited every year, and that is to your advantage. And we're registered with the CFTC, a member of the NFA, and we're located in California. And you've seen some of our presentations maybe on various places online. We used to do a lot of this in person as well. And just again, as John said, I've been doing this for a while, 32 years now, co-founder of AltaVest, licensed since 1991, attended USC with my BS in Business Administration. And I also have my Series 6 and 63 securities licenses with mutual funds and annuities. And I'm currently with the Series 3 futures registration and Series 65. So that's kind of a little brief background. Let's dig into this here. And John, this one is for you. If you're still paying attention, this one photo, and I'm sure you're going to know who this is. Who's that young chap there? So the rest of you don't know, that's Lou Zamperini. So he is the subject of the book Unbroken and movie Unbroken. And I had a chance to meet him a few years back, probably about, no, it's been at least 10 years, time flies. And I was able to take a ride in a B-17. That's down at Zamperini Field in Torrance, named after him. So that's for you, John, being an aviator. Thought you'd appreciate that.
I not only have I read the book and seen the movie many times.
Right.
I used to live right next door to the prison camp he was kept at in Tokyo.
Oh my gosh. Okay, that's even more color to the story.
Of my apartment.
Yeah, fascinating. Yeah, but he was very talkative, and we chatted for quite a while right down there on the tarmac. So anyway, I threw that in there for you.
They live a long time, and I think he just passed away. By the way, I'm one of only about a dozen people in the United States who's licensed to pilot a B-17.
Oh, wow. I didn't know that one. All right. Well, I'm glad I threw this in there and got us talking.
Yeah.
Well, very cool. All right.
Go back and mute myself.
Yeah, no, that's great. Thanks for chiming in. Okay. Let me go to the next screen here. That's odd. Something's frozen here, folks. I don't know why. Let me see what just happened. There we go. There's a glitch. Okay, let's jump into the top 3 barriers for traders. Jump in and let me know which ones you identify with the most. Number 1, how about just a lot of noise, storytelling, narratives, opinions, and May 9th, Home Depot could be a big win right now. May 16th, they just post their worst revenue miss in 20 years. So you get this all the time. Jim Cramer says Elizabeth Holmes is the next Steve Jobs. Of course, she's in prison now. Sam Bankman-Fried is the next JP Morgan, and he should be in prison. But not to pick on Jim Cramer, but the point is it's a lot of storytelling and just opinions and bloviating and whatever gets the clicks and the headlines and whatnot. This one really cracks me up. I left it in here. It's a few months old. Worthless price predictions. So Bitcoin could plunge 70% to 5,000. Or this guy says it could go to 250,000, 250,000. I think he's with a large PE venture firm. Anyway, so that's not really helpful. Either 250,000 or 5,000, take your pick. So again, a lot of noise, a lot of opinions kind of getting in the way, I guess you could say, of any clear thought. How about number 2? How about time and discipline? Do you really want to sit behind your screen all day? I think I heard John mention, of course, most people don't want to or can't sit in front of their screens. Here's a guy, he said he sits from the market open until the close in front of his computer every once in a while, even after market hours. And that's pretty typical if you're going to be a day trader. But that's not what we do. And this was a great quote I thought I'd throw in here. All we have to decide is what to do with the time that is given to us. I think there's very simple yet profound. So thought I'd throw that one in there. And I don't know, I'm getting a glitch. Anyway, number 3 here, human emotions. How about fear and greed? We got to master this cycle of market emotions where you're euphoric as you're winning and you're despondent as you're losing, and then you get optimistic again. You want to get off that roller coaster. Markets are correct 100% of the time, but we aren't. It can be expensive convincing the markets that you are right. That's from Ed Sequoia in a book, Market Wizards. He's featured in that. And that's the copy I dug out from storage of the new Market Wizards. Those great books if you haven't read those. They're timeless. And you don't want to end up like this poor guy here on the tombstone, arguing with the market all the way into the grave. And Motley Fool noted 3 common biases when making investment decisions. We've kind of synthesized those and broken them down to a recency, a confirmation, and an anchoring bias. We won't go into all that, but I think you kind of know what that means. So really, you need to control those emotions. And I think we're going to help you with that when I show you the software demonstration in just a second here. In fact, we've been working with all these clients for all these years and thousands of clients. So that's why we developed our ThetaTrader. And I'm getting a glitch here. So anyway, algos have no emotion and they're dominating the landscape. And what percentage of trading is algo driven? It's 90%, according to JP Morgan. So that is our competition, not necessarily people like us behind their screens. So can we use algos for professional options trading? Yes, we can. And that's what we're going to jump in here. I've got this odd delay going on the slide presentation. Sorry, folks. So multi-leg strategies to collect premium. This woman here from CNBC, she had a great commentary, so I was able to capture it here off video. She says, option spreads are buying and selling of different contracts, a common way for investors to hedge risk and volatility. It's usually cheaper because you can offset your costs by the proceeds from different contracts. And she's absolutely correct. And it's been used by Wall Street professionals for decades. So with that in mind, let's take a peek at how an insurance company might trade options. They would be getting paid premiums to assume risk, and they would be selling and managing time. They would be insuring themselves with hedges, and they'd be consistent and patient in that process. And they're looking at the probabilities and math, just statistics is essentially what they're doing. And we're going to look at premium collection strategies with options here. We're going to look at lots of base hits where we collect premium, and we need to be consistent and patient and manage that risk because, of course, there will be losers along the way, no doubt about that. And manage reward. That's just as important. You don't want to overstay your welcome. And you'll need someone experienced to help you along the way, as well as the right tools. So again, these are not grand slams we're going for. And these can be directional or non-directional, doesn't really matter. These can be very flexible strategies. So these are credit spreads where you collect premium. Again, every position is covered or insured, so your risk is limited and your reward is predetermined in advance. Could be non-directional as well. And we'll show you our unique strategy for that. And look at the difference here between trading stock index futures options versus individual stock options. Well, for one, an index is always less volatile than an individual stock. And strategies for any direction that can be applied with an index. You can hedge your portfolio, or you can just speculate on direction. Very easy to do with an index and these strategies. And then if you're doing an index, you are really looking at one market. You don't have to follow the, almost 7,000 securities markets or assets right now. So now, before we jump into the platform, I want to cover 2 of the Greeks. And if you don't know what those are, it's simple. We'll make it real easy for you. One is delta. How much does the value of the option change when the underlying asset price changes? So that's delta. But it's also the approximate probability of expiring in the money. And we'll review that in a moment. So here's a delta of 0.25. So that means there's a 75% chance that option would expire worthless. And of course, delta is always moving as prices move and as time ticks away. And it is not the probability of a winning trade, so keep that in mind. And theta, this is the other Greek. That's time decay. So options are a wasting or decaying asset. They have limited lifespan. And that's theta decay. When you refer to options, it's a negative number and it equals 1 day of time decay. So if an option premium's at 10 points and you have theta's negative 0.05, and the next day the premium drops to 9.95, and the next day 9.90, and so forth. So as you see on this graph here, as you approach zero or time zero, the percent of the premium of your option drops and drops and drops, just purely based on theta decay, or essentially the clock is ticking. And the lifespan of your option at some point will reach zero because it will expire at some point. So here's an example selling a call spread, real simple. You sell this out of the money call spread and you collect the premium for doing so. And in this case, the red line here, you sell this 45.50 call, you collect 4.5 points, and then you buy the higher strike price call option and you pay out 2.25 points, and that's your hedge, so to speak, and that cost money. So the result, though, is you collect $112.50 in this example, minus your commissions, of course. So that's simply selling an out of the money call spread, and you look for the market to stay below this threshold, generally speaking. And if it does, then you keep the premium that you received. And the same thing with the put spread. Your market's here, and you sell this out of the money put spread, and you collect, in this example, $100 and put that in your pocket. And we'll show you more in detail in just a moment. And these are not naked options. We don't trade naked options. You know, you don't want to trade naked options because at some point you're going to end up on margin call, and you have unlimited risk, and it can be a real big, well, let's just put it this way. It'll work great until it doesn't. So we do not recommend naked options trading. We've seen enough to recommend against it. So only covered spreads is what we trade. And two big advantages, of course, with a covered spread, you know your risk in advance, and there's no margin calls, like I mentioned. And I put this in here. I thought it was kind of funny. Who is Margin, and why does she keep calling you? So this woman's upset about the text message on her husband's phone there. So avoid those margin calls, folks. Iron Condor. And this will make sense when you see the demo here, but it's just a combination of the put spread and call spread we just saw. And that's all it is, a simultaneous combination. Here's a call spread that you sell. Here's a put spread that you sell. And if the market stays in the middle of that range, then you end up keeping the premium on both sides of that position. Just that simple. Now, here's our proprietary strategy. It's called a dragonfly, and it's a variation on the condor. And it has 6 legs, and that's a name that we came up with years ago for this particular strategy. And we'll jump into that here. And I'll slow down just a second to explain this in a little more detail. So here you have the, in this case, the E-mini S&P 500, you know, trading away here. And you can see these lines on the calls and the puts that represent by these horizontal lines here. So what you do here, the dragonfly structure is always the same. You would be selling 4 calls. You buy 3 further out of the money calls, and you buy 1 closer to the money as an additional hedge, or let's call it insurance or protection. And you have the same structure with the puts. You sell 4, and you buy 3 further out of the money, and then 1 closer to the money. And you'll notice that, maybe you can't quite see it, but this one that you buy here is 50 points closer to the money compared to the 4 that you sold. And you see the option, the call that you buy here, the 40-10 call, it's 50 points closer to the money compared to the 40-60 calls that you sold. So that will create a totally different dynamic and risk reward paradigm on this position, because you own these calls here and this put here, and they're 50 points closer to the money than the ones that you've sold. And the deltas are higher, and the theta is going to work differently as well. So I'll show you how that works in some examples. So here's the question. How would you create a spread like that? You've got a lot of variables, a lot of moving parts. How would you know which market to buy or sell, what strategy, what the price might be, your entry timing, your exit timing, managing your risk and your profits? And so that really is the question. And the answer is ThetaTrader. These are pre-built option spreads. The proprietary algorithm generates what we call theta trades. I heard John refer to the AI component of what he does. So there's a bit of that with what we do as well. It's all formulaic, algorithmic, and mathematical driven in terms of how the software works. And these are professional strategies. And these are available for bullish or bearish or even flat or sideways market conditions. So you have that automated risk and profit tracking with something called the risk thermal indicator. So we're going to jump into that. And let me switch screens here, folks. I've got ThetaTrader lined up. We're going to jump into a demo. All right, and if all is working well, you should see my ThetaTrader screen. And if it's not working well, I guess someone will let me know, hopefully. And you can see here, you have the theta trades section, you have your open short positions, and then you have your open long or bought positions. Then over on this side would be your account info. And this is all integrated with your AltaVest trading account. So ThetaTrader is our software. We developed it for our clients, and AltaVest clients are the ones who have access to ThetaTrader. And you can see here under Theta Trades, you have bullish setups here, strategies, and bearish and neutral or non-directional, if you want to use that phrase. And you can see there are three markets: the ES, the E-mini S&P 500, E-mini NASDAQ 100, and the E-mini Russell 2000. And that's really our primary focus with ThetaTrader. Again, the stock indexes, and that's really what ThetaTrader is designed for, strategies on those particular indexes. And I'll tell you why we choose the E-minis in just a little bit, but to kind of ruin the punchline, it's really a matter of liquidity and volume. The volume is tremendously large in these markets, so that's why we're in them. And you'll see all the different strategies are pre-populated. Why don't we focus on this right now, the non-directional or neutral, because we looked at the Iron Condor and the Dragonfly already. And you can see the algorithm has generated these trades for today. So the magic behind the curtain, the magic man, so to speak, the wizard behind the curtain, is telling us anywhere from 16 days to 49 days till expiration. You have all these different expirations here available, and it shows the strike prices for us, and it'll choose the point value for us as well. And we'll go ahead and look at this July end of month. And this is just a demo account I use for webinars. So I kind of randomly just pick usually the one with the most days till expiration. It's kind of how I do it. And let's take a look here, and we'll drill down into this trade. Yeah, I've got kind of a glitchy internet, folks. Sorry about that. Normally it's a little quicker, but we'll make it through. That's even after I reset the routers. So anyway, it's always something. So here's a graph of this particular trade. This is the call spread that's the algorithm has chosen. And here is the put spread the algorithm has chosen. And you can see here's the current price. And that's kind of what it looks like, the overhead view on the graph. And you can see this table has all the details. I'll go through some of this, so we won't spend a lot of time on it. 49 days till expiration on this trade. The settlement value, the premium being collected, your put risk, call risk, your commission, cash required, profit potential at expiration. This is something called targeted return on cash. And then this is your targeted annualized return. And you can notice here 175% versus say 79%. Well, I want to make it clear that you cannot expect to generate a 175% return if you place this trade. Really, this is here to compare one trade to another with a different expiration. So that's really to compare on a relative basis one trade to another. All right, and you'll see the strike prices are all selected. You can change them if you want. with this here, but I wouldn't recommend it only because the algorithm has chosen this for us. So you're selling the 40-20 puts and the 46-40 calls. You see the delta is 9.89. So that means there's over a 90% probability that these 40-20 puts being sold will expire out of the money. And the calls, those have a 6.94 delta. So you have an over 73% probability that these calls will expire out of the money. It always defaults to a sell when you're choosing the condors here under the neutral tab or the neutral approach. And the quantity always defaults to 1. So we'll jump up here. Maybe we'll do 3 of these. You can see the cash required moves up. And typically a condor, the cash required is, well, it's basically going to be $1,000 when you have a 20-point spread minus the commission, or I'm sorry, the premium that you receive. So you can notice here, cash required is $903.50. So if you did 3 of these, it'll just be 3 times that amount, $2,700 and $10.50. And we'll leave the pricing here. We'll do 3 of these and we'll place that order. And there, it just shows up as being filled because it's a demo account. But that's how easy it is to place the order. It's all pre-formatted for you. Now let's go back and I'll show you the Dragonfly. And please jump in with questions and comments in the chat and whatnot. If I can't get to it this second, I will save time at the end, and I'll probably answer a lot of the questions as we go. But I do need to hear from you because otherwise I don't know if I'm resonating or not, or if I'm on the right track. Now here is a Dragonfly. We'll look at the July end of month Dragonfly. Again, I just picked the one with the higher days till expiration for these demos. And we'll kind of do a comparison here between some of the condors and the dragonflies. So here's what the dragonfly looks like here. So you can see it has 3 calls and 3 puts, so a total of 6 different legs or 6 different strikes compared to the condor that has 4. And again, you can see the call that you're buying here and the put that you're buying. In this example is 50 points closer to the money, but it doesn't have to be. That just happens to be what the algorithm chose. I've seen it 60 points. I've seen it 40 points, maybe even 30 at times. But you can see the premium on the Dragonfly is always going to be higher. You're collecting $311, but your cash required, of course, is much higher because you're selling in increments of 4. So you're selling 4 puts and 4 calls. And looking at the graph here, so the red line are the 4 calls you sell, and the red line here would be the 4 puts you sell. And then you buy 3 of these and 1 of these. And you'll notice the delta on the puts that you're selling is 9.89. So again, over a 90% probability that these puts would expire out of the money. And the calls that you're selling, 6.94, over 73%. Or I'm sorry, 93% probability that the calls you're selling would expire out of the money as well. And if you want to do 2 of the Dragonflies, you can change it here, or 3 or 4, whatever. You can see the cash required moving up and down with your quantity. We'll just jump in with 2 of them. We're selling the Dragonflies and collecting the premium. We're looking at just under 8 points to collect. And before I move on, the targeted return on cash and your targeted annualized return on a Dragonfly will always be less than a condor. And that's simply because you buy this call and you buy this put, and that costs you money. So it's just like paying for extra insurance. That's an expense. And so that limits your profit potential a bit more, but it gives you a lot of staying power. And I'll show you that in just a second. So we'll go ahead and do 2 of these. We'll place that order. And there you have it. Just that easy to place a condor or a Dragonfly. And those, again, are market neutral or non-directional strategies, or you could have a slight bias up or down, because you can see there's a wide range there, a margin of error on those particular positions. the market doesn't have to go completely sideways. And of course, there are bearish and bullish positions that you can add, and we'll jump into that in just a second. But what I want to do now is show you there's a trade simulator here. You can go backwards in time and test out these strategies. And I've loaded some of these already. Let me squeeze this down so you can see the screen. So here's a condor, and you can use these buttons down here to go forward day by day, kind of see how this trade would have played out. And this is your end of month January of 2020 iron condor on the E-mini S&P 500. And you can use this button here to go forward. We're just kind of replaying history. You can see the RTI is green, and I'll explain that a little more, but green means good, do nothing. So even though the trade shows it's losing $31, the computer says green, it's good, do nothing. Now it gets to yellow, and that means a slightly elevated amount of risk, but still do nothing. And then it gets to orange. Okay, so that means more risk. And then it drops to yellow. So not as aggressive in terms of the risk. And then it turns green again. You can see the trade's getting profitable again. And then it ends up being essentially a profitable position on this condor. So just wanted to kind of give you kind of an idea of what it might be if you hold on to one of these trades, all the way through. Now, we don't ever recommend it, and I'll show you that you can automate it so that you close out the position. Now let's take a look here on a January end of month dragonfly. So all is going fine. You have the green RTI. And it turns blue. Blue means take profits. And you can automate this so that you don't have to screen watch. ThetaTrader, your account is being monitored by ThetaTrader. And when it turns blue, it'll automatically place an order for you to close out that position. So you can see how convenient that is. That's the whole idea for putting this together. Here's another one. I forget exactly how these play out, but why don't we check it out? And here's the condor that turned blue. So you see the condor turned blue on April 1st, when that's the first day it had a profit order. And, oh, let me go this way. So now let's say a dragonfly instead of the condor, if you had done a dragonfly. Look at that, it turned blue on March 21st. So that's the big advantage of the dragonfly. Sometimes you'll have an early exit signal to take profits and move on with your money compared to the condor. And again, it's just a different trade structure where you actually buy this call and you buy this put as additional insurance. And here's another one. Here's a dragonfly from this year. Let's see what happens. Turns yellow, little elevated risk, but do nothing. And then it turns blue on February 17, right here, February 17. That's your profit taking trigger. And that's on the E-mini S&P 500 for the March 2023. And let's jump at this one here on this end of month condor. Again, I forget how this one plays out. Turning yellow, elevated risk, turning orange, and then it turns red. So that one ends up being a loss. I wanted to make sure I threw that in there so everyone doesn't think I'm just showing you only the winners. So that's how it would look like. And again, this can be automated just like the profit taking signal. When it turns red and there's too much risk, it'll automatically trigger that order for you. And then you can close out that position automatically. And I think that's probably don't have time to go into any more, but that's a good example of how the simulators work. You can just go here and go to simulator. I won't spend a lot of time on this, but this is a great tool. You can go backwards in time and have a lot of fun with this. And here, I'll point out one thing too. You don't have to use this play button. You can just go straight to the end. save a lot of time. But people spend a lot of time with this, having a lot of fun, kind of replaying history. Now I want to show you here under the My Account setting how you can automate this. Let's see here. Where did I put that? Here it is. Under My Account, under Settings, you simply check this box here for activating Risk Manager, and you check the box here for activating the Profit Directive, and you click Save Settings. And that's all you have to do. Now you're fully automated on your exit signal, so that before expiration, any of the trades that we looked at will be closed out automatically, whether it's for a win or a loss, with that RTI turning red or blue. So it's really, really convenient and user-friendly. Also want to point out we have under the My Account section, we have daily research here as well, something called Trade Scope. We do that with our technical analysis here. It provides you some forward-looking guidance. And then we have daily commentary on the markets. So that gives you a narrative of what happened in Asia and in Europe, and then what to look forward to in the looking ahead section, and also the economic calendar releases and so forth. And then there's a great help file here, right here. And there's also video tutorials on ThetaTrader and education if you need a little primer or to brush up on some of the basics with these spreads that we talked about. But it's all part of ThetaTrader. And the help file is really useful. People say, oh, I saw this here and I'm really glad I looked, because here's the RTIs explained here. I'm not going to jump into all of it, and all the definitions for the various strategies and how they work and the symbols and whatnot. So it's all here. It's all part of ThetaTrader, and it's all available to you. And if, for example, maybe you're bullish right now on the NASDAQ and you want to do a bullish NASDAQ position, you could do something, we just call it a bull hedge. And I probably wouldn't do something like that today, but anyway, I'm just randomly clicking one here. And I'll just show you what that looks like. And the bear hedge would just be the opposite. But let's look at that chart. So here we have what we call a bull hedge. So if you're bullish, you'd want to buy a call spread that's out of the money, and then to pay for it, you could sell an out of the money put spread. So in this case, looks like here, we'll just leave the strikes the way they are, and we'll just do 2 of these randomly here, place that order. And oftentimes you can do a bear hedge or a bull hedge at either no cost or a credit. So it doesn't cost you any money to actually place that position and have that position on your account. So that's kind of using one spread to pay for another. And let me point out something else, because someone every now and then will ask about it. Not something we use a lot, but if you did want to build your own position, I think I kind of briefly touched on it, but let me go back here. Got a little bit of a glitch somehow. But if you want to build your own position here, you click on this, and you're not necessarily in love with the particular strikes that ThetaTrader has chosen for you. You can certainly adjust that strike price, or one or both, but of course that changes a lot of the trade. You can see here, and I'll give you a red warning sometimes. But there's also a trade builder here as well, so you could start from scratch, pick the markets you want, and build out your trades by choosing the strategy here. So that's available to you as well. And if you want to go backwards in time and look at your closed positions, let's do that here. So you can filter here based on time and date and market and all that, but this is essentially 20 trades on this page from the demo account. You can see there's 17 winners and 3 losers. The short positions, or the short spreads, or the credit collection, premium collection, there were 15 winners and 2 losers. And that makes a lot of sense, because we told you the deltas, if you're selling these positions that have 93% probability of expiring out of the money, mathematically speaking, over a period of time, you should have a lot of winners compared to losers. So you can see how it kind of plays out, even with just a random demo account. You can see how I'm just randomly placing orders. And we had 3 bought positions here. 2 were winners and 1 was a loser. But you can go back in time. Here's this one dragonfly. And I've just clicked on it. You can see how it's highlighted in gray down here. And it was on 27th, and it was closed out on April 18. And that's what it looks like. So this is when it was placed, and market just chopped around, and then theta decay worked. And then you finally got the blue RTI, and an order was triggered to close it out for a profit. And that's just that simple. And then your open positions, you can see them on the dashboard, or of course, you can go to your open positions here, all on one page as well. I don't know what it is. I've got a little bit of a sluggish internet something going on here, folks, but you just bear with me. Anyway, I think we have covered, oh yeah, here, the open positions, all in this one page here. So it looks just like the closed positions, except these are open, or you can just go to the dashboard, which I kind of tend to do here. You can see everything at a glance on your dashboard, your open short positions, your open long positions. It gives you all the RTIs. And you can see how most of the bought positions are going to be probably in a losing position. When you're doing these spreads, buying options is kind of a lower probability outcome. Just the way it is. So with that said, let me switch gears. I think I've covered everything I want to. Again, you can be bearish. You can do just outright long puts. You can just buy put spreads if you wanted. If you're bearish, of course, you could just sell call spreads here, but it's all pre-selected for you. You don't have to build anything. And of course, you saw the non-directional strategies as well. You can also do something like for example, a butterfly. We've done those. There's a little more complex, but we don't want to get into all that right now. All right, let me switch screens, get back. I want to show you the best feature of all. I think this is the best, and that's kind of based on I guess you could say, the comments we get from clients. So can we make it easier for you? Yes, I think we can. How about our trade alerts, our one touch, 1 minute responsive alerts? All you do is simply touch accept or touch reject, and that's all you have to do. You'll receive that alert on your smart device, pad or email, and if you like it, you touch accept. If you don't like it, you touch reject. So these alerts are live, meaning they're integrated with your AltaVest trading account. So you touch accept and the order is placed. Here's an example. You'll receive an alert via a text message. You get a link in that alert. It's from a few years ago, but it's all works the same. Although I should probably update this because there's a few extra features. But anyway, you'll see you get a description of the trade. That's an iron condor on the December E-mini S&P 500. And you'll get a graph of that trade, the call spread that's being sold, the put spread that's being sold. You'll see your account number, the net premium being collected, the cash required, and then look at this, selling 10. Well, that quantity is pre-selected for you based on your account. So everything is pre-sized for your account. You don't have to try to change or build anything or do anything. Everything is pre-selected for you. You can see 71 days till expiration, your targeted annualized return. So if you like what you see, you just simply touch accept. And the technology handles the rest. I'll just do it one more time. I'll let you watch. So talk about convenient. Doesn't get any more effective than that. That's for sure. Now, here is how you can get involved with ThetaTrader. Let's jump on to the next page here. Oh, any minute now, folks. I'm not sure why it's so glitchy. All right, here we go. You can become a ThetaTrader member, and that includes the ThetaTrader software. Everything you just saw with the Theta trades, they're automatically generated. The risk thermal indicator, so your automated risk and profit management. And then the trade simulator, you can go backwards in time. You saw how effective that was and unique that is. $3,500, a $3,500 value on just the software. And that as well includes your trade alerts that we just saw. Again, these are those integrated one-touch trade alerts. You know, we have clients that they'll say, oh yeah, I was, you know, John might like this. I was in the cockpit of the plane and I was getting ready to take off and I got the alert and accepted your trade. I was in the aisle of the shopping market with my kids. I was, you know, wherever I was at soccer practice waiting for my kids. I was at home on the couch when I got the alert. So you can be anywhere doing anything. That's the beauty of that. Valued over $4,400. So your ThetaTrader membership includes ThetaTrader, everything you've seen, and the alerts, valued at over $8,000. And here's the thing that really makes it worthwhile is you have us. We are professionals, we're experienced, and we're licensed. You have us to coach you along the way. We'll work with you. We can share the screen with you, show you what's what, review your trading strategies, your plans, your desires, whatever it may be, develop that relationship. So you have that private coach who's experienced and licensed. And that's what we do. That's part of the whole package, at least $7,500 value for that type of knowledge and training. So with everything, that value of over $15,500 with ThetaTrader. And then just to get a little corny, I don't want us to forget the proprietary research, because people do really love our research, and that's valued at almost $3,000. That's part of ThetaTrader. That's in the platform. Once you log in, you'll have access to that. And then, of course, the online tutorials, that's in there for you as well. I just briefly mentioned that, the videos earlier. So to summarize, folks, here we have ThetaTrader. Everything you've seen today, valued over $18,500. And that's the retail value for all of that. And of course, you know, we aren't going to offer it at that. This is what we would offer it for in live events, in-person events. We'd go to different hotels and whatnot and go around from city to city. It'd be $4,000 in those live events. And then people would line up at the back of the room and, you know, sign up and so forth. But we can do a lot better than that, folks. Lifetime membership to ThetaTrader. This is a special MAD discount, as we like to say. And again, it's lifetime membership. One payment of only $597. And that's a one-time payment. And this is your lifetime membership. So cf.altivest.com/MAD. And yes, it does expire. So this is not just an open-ended offer. So keep that in mind. And you really have no excuse, folks. There's a 30-day guarantee on this. So if you signed up and after 2, 3, 4 weeks go by, whatever, and you think, gosh, I can't do this right now, something in my life situation has changed, even though I like it or whatever, that's fine. Let us know. That no one's holding your feet to the fire. We're not twisting your arm. We've been doing this for almost 30 years. So if it's not for you, it's not for you. But you have that guarantee. So you have no risk on that membership fee. So this is what it looks like. The offer page, it's just a simple one page. Fill it out with your credit card and enter, and then you'll get your credentials to log in and we'll get you onboarded. So now a few FAQs. Some people ask about tax efficiency. Yes, futures options are tax efficient. So if you compare them to individual stock options, here's an example. I don't go through all the math, but In this example, the trader has a 12.6% return trading individual stocks, but the same math in trading futures options, you have a 14.64% return. And that's because of the treatment of the gains. 60-40, your capital gains apply to the 60% of the profits. So, and those are usually going to be much less than your individual income tax rate. So a big savings simply because you're in a tax efficient space and there's no more itemizing. That's a big benefit too. You just have your profit at the end of the year and you plug that into your taxes and that's it with your 1099. That's that simple, folks. Always consult your tax attorney or advisor, of course. And why the E-minis? Well, the E-mini S&P 500, for example, I mentioned on that. It's briefly I mentioned or touched on it. It's liquid, it's efficient, it's cost effective, and it's huge actually. It's much larger than all the other markets combined in terms of the average daily dollar volume. So for example, the E-mini S&P 500 compared to the SPY trades 9.8 times larger in terms of the average daily dollar volume. And compared to all the ETFs around the world, 2.5 times larger. So again, this is where the volume is and additional reasons to trade those E-mini options, volume, liquidity, access. That means you get superior execution. That's according to the CME group. And you have those tight bid offer spreads there between when you're getting those spread offers, or I'm sorry, the spread orders filled, large market share. And I'll show you that. Basically, you can see the calls and the puts here and the calls and the puts and the calls and the puts. So the algorithm is looking for calls and puts to build the strategies. And if it's not available, it can't build the strategy. But that's what makes the E-minis great because there's so many strikes available and so much volume. And then here's a big deal too, the E-mini dragonflies. It just trades as one order. You saw how easy it was. You build the order and you press submit. But if you do that with stocks, you have to break it up into 2 separate orders, 2 separate spreads. And then retail stock options traders, real quickly here. This woman here again says they only have access to the most basic call and put options, and they don't have access to option spreads or more sophisticated strategies. But of course, you just saw how ThetaTrader gives you access to these sophisticated option strategies. And if you don't, you don't want to be a rookie options trader. She says here in 2021, 11% of Robinhood active users made options trades and fewer than 1% actually made multi-leg options trades. So if you only buy options, time and theta is working against you. And she's absolutely correct. It says the appeal for a lot of retail investors to buy options is that they're much cheaper, but your potential for profit is actually not that high when you consider the probability of profit. So more advantages to trading on those E-mini options. Again, you can just trade 1 or 2 markets. Margin use is effective, and then there's a clear cost structure. Again, I won't go into spend a lot of time on this. Our time is limited, but there's no payment for order flow in futures options. If you're not familiar with that, what it means is, I'll show you. It says here, Citadel draws a lot of criticism for payment for order flow. So what does that mean? They pay brokers like Robinhood to send their customer trades to Citadel to execute. So how did that work out for Citadel last year? Well, they generated a $7.5 billion profit, their best year ever in their market making. So when you're trading on these apps and they say it's free stock trading, it's not free. These guys are making $7.5 billion. That's just one market maker. And they're making that off of all the orders. And they just take a little piece of each spread or each transaction. So anyway, it says most popular trading apps generate a lot of revenue from payment for order flow. And they can make more money from options than regular stock. And so there's an incentive for them to lure investors into options trading. So if you want your broker to work for you, pay a commission. Payment for order flow is just disguised commissions. I think that's a fair statement. I think we all kind of know that. Doesn't mean you can't trade. It's just not free. It's just hidden. It's very opaque. So there's none of that with us. Our rates are simple, 5 1/4 round turn all in. And just that simple. And everything in ThetaTrader, by the way, is net of all commissions and fees. So everything you saw in ThetaTrader, all of the numbers, all the percentages That's net of all commissions. And here's a big box brokerage firm. It says they're 2.25 per contract, but that's per side. And then they don't even add up the clearing and exchange fees that end up being higher than what we charge. So our rates are competitive. And again, everything is net of all fees. Everyone's performance is different, of course, because everyone has their own account and they take trades, accept trades differently. What size of an account? We suggest 25 to 50,000 as a minimum. You want a free account? We can do that. $100,000 or more with your account size, we rebate that membership fee to you. People love to take us up on that offer, or you get half of a rebate with a $50,000 account. You can do IRAs and all the other typical types of accounts. And I'm going to wrap it up. I'm not going to spend too much time. I'm going to jump into a few questions, but we like the kind of flexible approach. You know, inflation still pretty hot, even though the CPI was coming down dramatically. It's coming down from a much, higher level. I mean, here's, let's see, here's the high there, but we're down 4.05. We're still, they're still targeting 2%. So there's a lot of work to be done there. The core rate has been flat, 5.5 to 5.6%, still well above the target rate of 2. That's what it looks like there. And I'm just going to kind of skip through some of this, especially because my screen is kind of glitchy. But let me go back and see if I have a few questions. In fact, let me just skip down to the end. Okay, yeah, when the position's closed, that's automated. So good question there. Got a couple minutes, I think. So those are automated, and you'll get a notification every time your trade is filled. Depending on where you are in Europe, you may or may not be able to have an account with us. Same thing with Canada. So contact me. And yeah, certainly, if you've never traded options, this is something you could do. We can help you learn along the way. And yep, you can certainly just buy calls and buy puts, but again, that's more of the lower probability outcome we feel. And yeah, this is for options, of course. It's an options trading platform. We're full service brokers. We can trade anything with futures, but this is a platform specific to options. And depending where you live outside of the US, so yeah, ask me about that. We have people in Singapore and Hong Kong and the Middle East and Australia and the UK and so on and so forth. So it just depends on where you are. And let me see here. This is just talking about the leading economic indicators are signaling recession. Student loan payments are resuming. That's kind of a big deal. I think I've got another minute maybe. Let me get to the end here. Days till expiration. Yeah, it depends. Some of the trades, depending on the volatility and so forth, might have 30 days. Some might have 60 days till expiration, but that's a good question. And just trying to get to the very last slide here, but again, I'm not sure why I've got this weird glitch here. But anyway, you do have the offer up in the chat room. So please take advantage of that and go to the page. And I've got my personal email, I believe, there as well. It's Eric, E-R-I-K, @altavest.com. And other than that, you've got the link to become a member. We'd love to have you on board with us. I think you'd like using ThetaTrader. It's going to give you exposure to something you're probably not already doing. And we make it very, very convenient. So with that said, I think am I out of time here, folks?
Yeah, it looks like I think John's about to come back up. Thanks, Eric.
Yeah, thanks for having me. It's always fun. I enjoy participating and taking a peek at everyone else's presentations too.